Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello everyone, looking at the Canadian MJ sector. Been a while since we've done a video, but we certainly cover it every day in the chat room, and there's been some decent trading opportunity with the recent news that came out with a more solidified date into 2018 for the legislation, and that definitely provided some upside, but it was short-lived. So let's start off with the sector leader, WEED, and that sector leader status might change. Now, obviously, it is the highest market cap, but APH daily chart is better, which we will look at here in just a moment. It's a more bullish daily chart. So looking at WEED, we have a very clear pattern of lower highs and lower lows ever since mid-February. We hit our top, and it's just been lower high, lower low, stair-stepping to the downside. We did form a bit of a double bottom, not exactly 955, 951, but that's our base of support now. So in the 950s, and the bulls are trying to change the trend. So we had the gap up where we had the reaction to that news, and it's so very clear that gap ups are for selling. If you are a trader in this sector, you are selling the gap up right at the open, and you are reloading if you want once we pull back. And this pattern I've never seen a more consistent gap up for selling and gap down for buying pattern. And in my opinion, it's due to the lack of pre-market trading. Whereas we have no volume and nothing to gauge these moves off of, the market makers are just dictating where the open is, and that is why this pattern is so consistent in my opinion. So we had the gap up open, profit taking right out of the gate. We hit $11. We pulled all the way back to $10.45. So if you're trading with a 1,000 share position, you can lock in a few $100s of profit and then reload. And you don't have to be a day trader and do this all the time. Just recognizing that the gap ups are for selling. And trust me when I say thousands of other traders are recognizing this pattern, and that magnifies it. And we're seeing it very consistently. We saw it 2 days last week, both on Monday and Tuesday, the gap up for selling with the opportunity to reload cheaper. So we had the bullish move to the upside, and we were looking for a bullish entry. Personally, I made a bullish entry on Monday at 1065, and that was because I was waiting for the low to be found on the day. Now, we don't want to just guess as to when the bulls are going to show up, so I give up a little bit of reward by waiting for the bottom to be found, waiting for the 5-minute time frame to change the lower high pattern, and then I'm comfortable getting in my bullish position. And when I made that entry at 1065, that position was profitable from the first minute of the trade, and it was in the green the entire rest of the trade. So I was able to set a stop loss at break even and just let it ride, and I ended up taking profit the next day once $11 broke after that gap up open. So if I were more in tune and not giving the daily live webcam coverage, I likely would have sold right at the open just because that is such a consistent pattern. But I gave it a little bit of a shot to see if the bulls would see any follow through. And it's very clear that $11 is a key resistance level, a psychological level going forward, as we have been unable to close above it on this bull move. So we did set yet another lower high. We saw this big dump back in March, and the high of the bounce was 1137. So we know that anything that we see in reaction to this news that is, if we do not break 1137, is just a lower high in this pattern, continuing the lower high pattern. So because it was a significant bounce attempt to try and break that lower high pattern, even though it was unsuccessful, that shifts our momentum in terms of our mindset, and we would then look for a higher low to form on consolidation. So once we couldn't break 1137, took profit on Tuesday from that short-term trade, just one overnight hold. And then once we broke 1065, we knew the bears were still in control because 1065 was a double bottom the next 2 days. On Tuesday and Wednesday, we had the same exact low. So as soon as 1065 breaks on Thursday, that is a clear exit signal for short-term traders, and it indicates to be ready for a higher low to be formed, and look what happens. We see a gap down open and a gap down for buying scenario where the bulls showed up. We had a gap here to fill at 1028. So as soon as we filled that gap to the downside, we start looking for a bullish reversal candlestick to form on the daily time frame. So with the open at 1030 on Friday, as soon as the price hits 1030, I can say, okay, if we close here or better, we are going to see a bullish reversal candlestick on the daily time frame. And from there, the bulls just built on that momentum for the rest of the afternoon. And so it was clear that more likely than not, the odds were in favor of forming a bullish reversal candlestick. And that was a gap down for buying scenario. So now from here, we have a new higher low, and this 1018 support is very important. If we lose that 1018 support, we're heading back down towards these 950s. So the bulls really want to hold this level and see a break of 1125, because that would shift this pattern that has been in play for over a month now, where we have our lower highs and lower lows. Now we have our base of support, and the bulls are looking to form a higher low and a higher high if we can get over 1125. So that's what we're going to be watching in terms of resistance levels. We're looking at the highs of all week. We've got 1079, 1094, that psychological 11 level that has been giving the bulls some trouble. And the bulls really want to see more than 2.8 million shares traded and a follow-through green day on Monday. And obviously the close at the high has momentum favoring the bulls heading into Monday. So the weekly time frame, not a good sign, losing this middle Bollinger Band. It's the first time this weekly middle Bollinger Band has been lost since gaining it back about 9 months ago. So we closed below it. It's currently at 1068, and we rejected. This is a back test and rejection right now. So the goal for the bulls next week is to get back over this weekly middle Bollinger Band and try and head back up towards the recent highs. You can see these Bollinger Bands are getting tighter and tighter as the range tightens a bit. But as of right now on the daily time frame, the short-term momentum favors the bulls. The mid-term momentum over the past 5+ weeks, 6 weeks now, that favors the bears. So it all depends on the time frame you're looking at. So the short-term daily chart is bulls, mid-term is bears, long-term clearly bulls, considering where we have come from over the past years. Past year, I should say. So that's the rundown basically on our mindset this past week. And looking at APH, why is APH stronger? Well, look how many resistance levels we have left from the highs that we've seen here. And I'm looking at 674, 685, and 699, and then we're at the highest price we've seen in 3 months. And for WEED to do that, we have to get all the way back up to 1330. So we still need another 25+% to the upside, where APH to get up to 699, we don't need nearly as much. We need less than 10%. We need about 5% to be hitting higher highs. So this consolidation was very healthy for the bulls, and I can say that because we keep forming higher lows. It's a completely different shift in terms of the momentum, where we have our double bottom here. This is a 601 must hold level. If I were in any position for APH, even if I were a long-term position, I would exit if $6 breaks, because it means we need to establish a new support level, and we could see a 5 to 10% drop after losing that level. But obviously that's not at risk right now. We've been forming our higher lows. We filled this gap up. So we had a gap up for selling scenario, the same as this sector constantly sees. We filled the gap that same day, and then the bulls kept momentum from there. And we have higher lows incrementally here, 638, 642, 44, 48, 50. So just stair-stepping slowly but surely higher, close at the high of the day, and the bulls are trying to break 685 this coming week to be looking up at that 699 resistance. And there's some tough resistance there at that 699 level, and that is because that is where we have multiple tops. And if we were to zoom out, which I suppose we shall do here, we will see how many times we have hit this 699 level. And it was back at the end of November. We had 699 as the second highest top that we saw, besides 779, the absolute top that we saw. So 699 was a rejection. Then we rejected from 696, 698, and 699. So it's very clearly that there is a wall of resistance just under the $7 psychological level. But look how much different this weekly chart looks than WEED. And this is why I'm talking about a potential shift on the sector leader. And again, not in terms of market cap, but in terms of the strength of the charts. And this weekly chart is way stronger. We didn't even touch the middle Bollinger Band. It's a very clear higher low, higher high pattern. The periods of consolidation are on low bear volume. There's no scary red flags here for the bulls. And we're in a nice channel. You can see these Bollinger Bands are ascending. And we're looking a lot stronger than WEED, which lost its middle Bollinger Band. You can see these Bollinger Bands are tightening, but we're trading sideways pretty much parallel to each other, where APH is still trending upwards. So I do like APH's chart on the daily time frame best in the sector. Let's check out ACB. ACB has also been very healthy consolidation. It made a big time recovery, and in terms of the big gap ups, we haven't filled these gaps back to the downside. We filled the first one, but not the second one down here. And gaps are definitely nice targets to be keeping an eye on. There's nothing that says we must fill gaps in technical analysis. So I'll always note where the gaps are. And oftentimes we do see reversals once gaps are filled. But in terms of, I would never look at this chart and say, oh, we have a gap down at 233. I'm not getting in bullish. That wouldn't be a way that I would utilize gaps. So this consolidation that occurred was very bullish. And I can say that because it was low bear volume, decreasing bear volume, and it was very contained. We didn't see any weak closes. We saw lower wicks with bulls buying the dip all these days. We closed at the high. It looks like the sector closed at the high on Friday. So we know where momentum is heading into next week. And if I'm a bull, I almost don't even want to see a gap up because I know there's going to be profit taking and a pullback. And if I were to see a gap up, I would be very likely to try and sell into that depending on how significant it was to the upside. If it's just a couple penny gap up, not really significant, not worth trying to sell and reload in my opinion. But if it is a significant gap up, that is when profit taking happens time and time again. So the resistance levels are the highs from the days, 260, 262, and 268. And 268 is a bit of a double top. That was the high of the bounce attempt here on February 28th, and now it's the high of the reaction to the news. So that 268 is a very clear resistance level the bulls want to get over. And we have a nice pattern here on the weekly time frame where we are looking for nice continuation. And it's a nice pattern just because of how clear these levels are. We have our low down at the 221 and 221 double bottom. And we have the level to break 284 to be seeing continuation. So 268 and 284 are the two major resistances. And in terms of major support, I'd be looking at 253 and then all the way down to 241, and then that double bottom at 221. So same scenario with APH and $6. If ACB were to lose 221, I would not want to be in a position because I would wait for the bulls to find a new support level. So EMC has been struggling hard, and it is the opposite of a blue sky breakout. We're at all-time lows, coming off of all-time lows, and it's a very clear lower high and lower low pattern. The very clear exit was as soon as 350 broke. After that level held time and time again, we know as soon as 350 breaks, the same scenario with what I just pointed out where I would be out, we were all exiting once 350 broke, stop losses just below 350 because we know there is no support, no clearly established support after that level. And you can see how we just absolutely dumped down to 241, huge losses once that support level broke. And you can be long EMC holding for 10 years, but utilizing technical analysis and key levels, you would know to get out at 350 and you can always reload cheaper. It's not like the price is going to completely run away from you if you do not have a position, unless the company were to get bought out of nowhere. That's really the only scenario where the boat would leave without you. So as of right now, we have a lower high, lower low pattern. The bulls need to break 253 to break the lower high pattern. It's a little double top the high of this past week. And the bulls are just working on building support levels because there's a lack of support down here. So I'm looking at 223 and 205 as the only real support levels. And the bulls, like I said, have to break 253 to try and turn this ship around. The weekly time frame shows this weakness. And here was this base of 350. So considering how recently we started trading here with EMC, we didn't build support, like I said. So losing 350, we were looking down at really like 314 and then down to 252. And here we are hitting new all-time lows, and the bear volume absolutely stands out. So very cautious in EMC. It's a name that I keep checking in on to see if the bulls are really developing any kind of momentum, which they are not. But it's something that I want to keep an eye on because I do think there will be some nice gains once the trend does shift. But we have not seen 2 green days in a row in over a month. We've seen, well, I'll take that back. We have not seen 2 strong green days in a row in 6 weeks. We have a couple single red or green days here, one big bullish day and a bullish day off the bottom. But other than that, there's just no follow through, no strength and no follow through. So keeping an eye on EMC, but I don't like it yet at this point. MJN, this is a nice pattern where we have a very contained pullback. And I can look at this and say, okay, this looks like it's probably going to be a bull flag on the weekly time frame. And I look at the weekly time frame and it does form a bull flag. So where we currently stand, we have this clear little lower high, lower low pattern on this healthy consolidation. It's more drawn out than the bulls likely would have preferred, but it is still healthy. So our low is 239. That's a must-hold level going forward. If I had a position in MJN, I would absolutely be out if 239 broke. Same scenario, we would have to find a new level of support, and we could see some significant downside from there. In terms of breaking this lower high pattern, that occurred on this reaction to the news. So our resistance levels were 299 and 308, and we got up to 316. So once we break this lower high pattern, our mindset shifts and we look for a stop in that lower high, lower low pattern. And now we're going to look for higher lows and higher highs. So we're looking for a new higher low of support to be found. And we aren't very confident that it has been found yet because we don't have a solid bullish reversal candlestick this week. And we didn't close up at the high of the end of the week like most other big LPs did. So support right now is 272, but there is a gap at 267. So keeping an eye on that gap, again, doesn't have to fill right now, but if we don't see the bulls give a convincing candlestick that they are going to show back up, establish our new higher low of support, and head back up towards 316 resistance, I'm going to be patient and see if this 267 gap does fill. In the weekly time frame, what I'm talking about with that bull flag is we have a big time bull move to the upside, and the consolidation that is going on, you can draw a nice little parallel channel of support and resistance, and we're still in that channel, and the bulls need to see a close. We came close here this week, but we couldn't hold on to those gains. There's an upper wick rejecting from that channel. We need to see a close above it to indicate continuation and a move back towards the all-time highs. So keeping an eye on MJM because that is a very bullish weekly chart. Let's move on to SPWRF. SPRWF, that is. So I can't chart SL, so I chart SPRWF, and we have a less convincing break of the lower high pattern. We got 122 and 123, so a penny, not entirely convincing. We need to see that level break, but it is the same scenario where we had such a significant bounce off the lows that we are looking for a higher low to form, and we're looking for the bulls to give that 122 and 123 resistance another shot. So same thing with not a very convincing candlestick showing that the bulls have established that new support, but we do have a very clear level to be watching. It's previous support, now resistance, and it's 110. And a price action level, let's try that again. When you have a level of price that sees a lot of action around it, if the price is above it, it's going to be solid support, and if it's below it, it's going to be solid resistance. So look at how many times 110 has been a clear level. Even all the way back here, the high of December 30th was 110. We've got the low of the day on March 17th was 110. High of the day, March 22nd, was 110. Low of the day, the next 2 days, same price. And then the low of Friday, same price. So that's plenty of price action at that point where I can know that that's a pretty key support level. If I were in SPRWF right now, I would have a stop loss at 108, giving a little bit of wiggle room there, because if we break 110, we don't have much support established down here at all. If I had to pick out some levels, it would be 106 and $1 psychological. So it's the same scenario where I would want to be cash if a key support level breaks, and I can step back, reassess the situation, and make another entry once I am confident that a more solid support level has been found. So support is 110, resistance is 116, and we have a little double top at 117 from Wednesday and Thursday. Bulls need to break 117 and 123 to try and change this daily downtrend that we have been in. And this is a weaker chart as well on the weekly time frame, because what we have here is our high, our low of consolidation, still fine for the bulls. Now we have a lower high and a lower low. That shifts momentum and it shifts mindset. So by breaking 101, that is a key loss of support. And we continue to close over $1, so the weekly time frame is still maintaining that support. And look how that 110 level comes into play here. We have seen a close above 110, even though we've dipped well below it. We have not closed below 110 in the past 5 weeks. So that level clearly stands out to me, and we need to see the bulls turn back around. But if I had the choice, I would certainly be in names like APH as a bull over SPRWF, just because the weekly chart is very clearly more bullish. OWCP, I gave my personal opinion on the fundamentals of OWCP over the past couple of months after going through the financials, and they say that, revenue is going to be coming in Q2, they anticipated. I honestly would be shocked if that were to happen, and I will by all means come on here and say I was absolutely wrong, but I do not foresee the time frame that is laid out by the bullish investors posting in all these chat rooms and forums. I just don't foresee this happening, and I see plenty of red flags in the financials that lead me to believe that more dilution is likely coming. And since the high, we have pulled back almost 60+%, more than that. So this is a scenario where you need to lock in those gains when you see such a move to the upside so quickly, hundreds of percent in a few weeks. You can be the most biggest bull on the company in the world, but you have to recognize that we are overbought and consolidation is coming. We're not just going to keep running forever. That's not how the stock market works. That's not how human psychology works. And that is an example of greed, so to speak, where people get greedy and don't lock in their profits. It's the exact opposite of fear. And here was an example. So not trying to rub it in if people are watching their gains evaporate here in terms of percentages just because they went long and they're sticking with it and I'm holding for 5 years no matter what. It really, if you're utilizing technical analysis and you see the price go this high this quickly, you know that if you lock in that move, think about after you go 500%, what is the risk to reward? What is the likelihood of continuation? It's very clearly that it favors risk to the downside rather than reward to the upside once you see a move that significant. And the people that do hold on, in my opinion, are fairly new to the market, which obviously isn't anybody's fault, needs to get a few lessons. I had plenty of lessons in the penny stock world where I held on too long and watched my gains evaporate. So I very quickly learned to sell the big overextended moves to the upside, and I can always reload cheaper if I do like the company. So that has been the scenario here where we have pulled back in just a short amount of time here. We've pulled back in a month and a half from 323, and the low of this week was under $1. So about a 65 to 70% pullback, where if you sold even nowhere near the top, let's say you sold at 250, you could now reload with twice as many shares for the same amount of money. So again, we have a bullish reversal candlestick here on the daily time frame, but in order for the bulls to change the trend, we have to break the lower high pattern. And I'm seeing a high here on a bounce attempt of 167, a lower high of 155, 151, and the bulls at this point would have to break 151 for me to be looking for any kind of upside. If we start losing $1 support and closing below it, that's a big red flag for the bulls. That psychological level is very important. We do have a gap here at 94 cents to be keeping an eye on. We almost filled it on Friday with that big dip, high volume dip. The bulls did buy that dip, and they do have a bit of momentum heading into tomorrow, or I should say Monday. We need to see a bullish green candlestick to confirm this reversal candlestick to be looking for the bulls to try and change this trend. The weekly time frame is still very healthy long term, but again, it's the fact that we moved so fast to the upside that we have pulled back 70%, and we're still extremely bullish on the weekly time frame. So we can form a higher low anywhere compared to 49 cents, and we're going to keep this weekly longer term uptrend intact. But obviously that's giving back over 80% of the move to the upside. So we don't want to rely on that support to hold and just say, well, as long as we keep forming higher lows, because it's really missing out on an opportunity to either lock in profit or reload more shares for the same price. So we did lose the exponential support this week, and I'm watching that gap very closely at 94 cents, and we'll see if that does get hit this coming week. RTI, the bears are in control, where we continue to see lower highs and lower lows, but it's the same scenario. We have our new lower high at 74 cents. We're looking for the bulls to form a higher low compared to 56 cents. As of right now, that level is 65 cents, but it's not convincing. We don't have a long lower wick. We don't have a strong close up near the high of the day like we saw on APH and WEED. So I would be more cautious because I do not trust that the new support level has been established yet. So we're looking for that higher low. We need to see a break of 74 cents for continuation on RTI for the bulls to remain in control. This is a good looking weekly chart in the sense that we have long lower wicks with bulls buying the dip and defending the higher low pattern. I'm looking at 54 support, and we bounced off of 56. And 54 was the low of consolidation at the end of January. So we're maintaining an uptrend on the weekly time frame. We are on the verge of a bearish MACD cross. We need to be watching that. The bulls need to show up and confirm a reversal candlestick. These have been some bullish reversal hammers on the weekly time frame, but we haven't seen any follow through and confirmation. So we've seen 5 red weeks in a row now, and the RTI bulls need to break this lower high pattern on the daily time frame to see the bulls turn things back around. And same thing here. We haven't really seen a ton of convincing volume for the bulls. We saw this nice ramp up in volume. That's exactly what the bulls want to see on an uptrend, increasing bull volume. But other than that, we saw decreasing bull volume on this little bounce attempt, weak bull volume on this recent bounce attempt. We need to see increasing bull volume to be convinced that the bulls are showing back up. EMH broke this resistance of 131. That was a good sign for the bulls, but again, only by a penny, not very convincing. We need to see follow through and a break of that level to reverse this downtrend, which has been in play for 2.5 months of lower highs and lower lows during this consolidation. So it is more convincing that our higher low has been formed here because of the candlestick on Friday. So I'm looking at 121 as our recent low, and we hit it 3 times. So that is our new must-hold support level. If I were in EMH trying to play this bounce, I would exit if 121 were to break. In terms of resistance, if the bulls can break 132, I'm then looking up at the high of this bounce attempt of 138. On the weekly time frame for EMH, losing the middle Bollinger Band is never a good sign. Bulls always want to hold that level, and now it's acting as resistance. We haven't even back tested it yet after losing that level as support. And it's very clear that the bulls are buying the dip with the nice long lower wicks, but we have to see follow through to the upside. We have not seen 2 solid green weeks in a row since back in early January. So that stands out as well. We need to be seeing bullish candlesticks on the weekly time frame with follow through and conviction. So as of right now, APH is the strongest name. I like it the most on the daily time frame. We have a lot of the big LPs with some nice bull momentum heading into next week. We'll see if we can follow through with that. Keeping an eye on EMC, but not liking the fact that we don't have much support built in at all on the stock. And the other names, just talked a lot about them, and I don't want to talk about them anymore. So thanks for tuning in. Long video here. Congrats if you sat through it. I hope you have a great rest of your weekend, and we will certainly be keeping an eye on the MJ sector forever. And just a reminder, we do have that new ETF coming out that's very exciting, and that is coming out April 5th, and I got to get the ticker for that, but we will certainly be charting that ETF as a way of investors can spread out their exposure and get a more diversified approach to the MJ sector. So that'll be really interesting to watch. And in my opinion, in the next 5 years, we are going to see marijuana ETFs on major exchanges in the US as well as Canada, and it's certainly going to be a more common phenomenon. So thanks for tuning in. See you soon.